Hi, everyone, this is the Encyclopedia channel. Do you know what the three expressions lost decade, lost 20 years, and lost 30 years are talking about? In the 1980s, the United States and Japan signed a Plaza Accord, which caused Japan to fall into a long-term economic stagnation, so there are three expressions from different time perspectives. So why sign the Plaza Accord? What is the content of the Plaza Accord? What does the Japanese real estate crash and the Japanese economic bubble have to do with signing the square? In the early 1980s, the economic relationship between Japan and the United States became an important factor in the global economic landscape. With its highly competitive manufacturing and export-oriented economic model, Japan has rapidly emerged as an important player in the global economy. However, this has also triggered a series of economic frictions with the United States. Since World War II, the Japanese economy has experienced rapid and sustained growth. In the 1970s, the Japanese government adopted a series of economic policies, such as heavy industry support policies, export-oriented policies, and monetary policy intervention, which made Japan's manufacturing and export businesses flourish. Japan's products such as automobiles, electronics, and steel occupy an important position in the global market and have achieved a huge trade surplus. As Japan's manufacturing competitiveness strengthened and its trade surplus widened, the United States expressed serious concerns about Japan's trade imbalance. The U.S. government and companies believe that Japan has adopted a series of trade barriers and unfair trade practices, such as restrictions on imports, tariff barriers, quotas, and market access restrictions. That has sparked strong criticism in the United States over Japan's trade issues and has created tensions in economic relations between the two countries. At the same time, the U.S. economy faces a host of challenges. From the late 1970s to the early 1980s, the United States experienced high inflation, high unemployment, and trade deficits. The depreciation of the U.S. dollar and fluctuations in interest rates triggered a series of financial market shocks, which not only made U.S. imports more expensive, but also reduced the competitiveness of exports, which also had a profound impact on the global economy. This unstable situation further exacerbated the economic problems between Japan and the United States. To resolve these economic problems and avoid further trade disputes, Japan and the United States began a series of high-level economic talks in 1985. The goals of these talks are to start a dialogue on issues such as trade, exchange rates, and economic policy, and to find solutions to promote economic cooperation between the two sides. As a result, Japan and the United States reached an agreement at the Plaza Hotel in New York on September 22, 1985, known as the Plaza Accord. The agreement is seen as a milestone aimed at resolving economic friction and financial market turmoil between Japan and the United States. The main contents of the Plaza Accord include four aspects. Exchange rate stabilization. The agreement encourages the Japanese government to reduce dependence on exports by expanding domestic demand and take appropriate measures to stabilize the exchange rate. Specifically, Japan pledged to take action, if necessary, to allow the yen to float more flexibly in international currency markets. Economic policy coordination. The agreement requires Japan and the United States to strengthen economic policy coordination and cooperation to promote trade balance and economic growth. The two sides agreed to hold regular high-level economic consultations to exchange and negotiate on their respective economic policies. Market opening. The agreement encourages Japan to take steps to expand market access to foreign products and services and lower trade barriers. Japan agreed to strengthen intellectual property protection and improve regulations and approval procedures to improve the investment environment for foreign companies. Financial cooperation. The agreement requires Japan and the United States to strengthen financial cooperation, including cooperation in the regulation and monitoring of financial markets to ensure the stability and transparency of the financial system. The signing of the Plaza Accord had a profound impact on Japan and the United States as well as the global economy. For the United States, the Plaza Accord was aimed at resolving trade imbalances and exchange rate issues between the United States and Japan. The agreement calls for Japan to take steps to increase imports of U.S. products and stabilize the exchange rate to reduce pressure on the dollar to depreciate. However, some believe that the effect of the agreement is not obvious, and the United States still feels the trade pressure from Japan. For Japan, the Plaza Accord promoted the adjustment of Japan's economic structure and the development of domestic demand. The Japanese government has adopted a series of policy measures, including increasing public expenditure, lowering interest rates, relaxing market access, etc., to promote domestic economic growth. The signing of the Plaza Accord also means that the Japanese government must take measures to stabilize the exchange rate of the yen, which is a challenge for Japanese export companies. The Plaza Accord required the Japanese government to reduce its dependence on exports by expanding domestic demand. In order to achieve this goal, the Japanese government has adopted a series of measures to stimulate economic growth, implementing loose monetary policy and loose fiscal policy, including providing low-interest loans and increasing infrastructure investment. These measures stimulated an increase in bank loans and capital supply, leading to a flood of funds into the market, and Japanese companies and individuals also fell into a frenzied investment spree, especially in real estate and stock markets. This craze has promoted the rapid rise of asset prices, forming a huge economic bubble. In this context, Japan's stock market and real estate market have reached record highs, and the market has expanded rapidly. Housing prices have risen sharply, land prices have skyrocketed, and an atmosphere of speculation prevails. Many people believe that buying a home is a way to get rich quickly, resulting in an oversupply of the real estate market and further pushing up prices. Banks also lend on a large scale, and loans are easy to obtain, which further intensifies the demand for housing purchases. Investors, businesses, and individuals have poured into the real estate market one after another, and even the phenomenon that the land price is higher than the actual value has appeared, causing the bubble to continue to expand. However, the housing bubble boom was not sustainable. While the bubble was overinflated, the Japanese economy was faced with structural problems and weak domestic demand. In addition, the financial market and regulatory agencies have deficiencies in the effective supervision of the real estate market, leading to overheating of the market and neglect of risks. In 1989, the Japanese stock market crashed, marking the end of the bubble economy. Meanwhile, the real estate market is showing signs of a price correction, and investors are starting to get uneasy. Many people became worried about the bursting of the bubble and sold their properties. As supply and demand reversed, house prices began to fall, asset prices plummeted, and the real estate market quickly collapsed. It can be said that the Plaza Accord was the basic condition for triggering the Japanese economic bubble. The implementation of the agreement intensified the capital flow and investment boom, and promoted the excessive inflation of asset prices, especially the real estate market. The agreement emphasized a stable exchange rate and increased imports, which provided investors with more confidence and further contributed to the formation of a bubble economy. Investors took advantage of low interest rates and a loose financial environment to make high-risk investments one after another. This investment boom further pushed up real estate prices and stimulated demand for land and houses. The impact of the Plaza Accord on the financial system, especially financial institutions related to real estate, eventually caused the collapse of the real estate market and hit the entire Japanese economy hard. Many banks and financial institutions are in trouble due to real estate loan defaults and the accumulation of non-performing assets, leading to instability in the financial system. The increase of non-performing loans in the banking industry has deteriorated the capital position of banks and reduced credit liquidity, leading to credit crunch and financing difficulties for enterprises. This has had severe repercussions on the real economy, with business closures and job losses surging, and individuals and families facing financial distress. At the same time, the collapse of the real estate market also led to a huge loss of wealth. People's purchasing power was severely weakened, and consumption levels fell, prompting the entire Japanese economy to fall into a severe recession. It can be seen that the Plaza Accord exacerbated the formation and eventual bursting of the Japanese economic bubble. The implementation of the agreement has promoted the excessive influx of funds and investment boom, which has promoted the excessive expansion of the real estate market. However, the unsustainable nature of the bubble economy eventually led to a market crash that brought the Japanese economy into a period of stagnation. The lessons from the Plaza Accord and the bubble economy are profound, emphasizing the importance of financial regulation, the awareness of investment risks, and the robustness of economic policies. The bursting of the Japanese economic bubble has also sounded the alarm for the global economy, revealing the dangers of economic overheating and financial bubbles. The economic crisis has triggered a reassessment of the Plaza Accord and calls for reform of economic policy and the financial system. The collapse of Japan's economic bubble after the Plaza Accord triggered an emergency response by the Japanese government. The government has adopted a series of fiscal and monetary policies to deal with the recession. These include lowering interest rates, providing fiscal stimulus, and reviving the financial system. However, these policy measures are only temporary hemostatic measures to a certain extent and cannot fundamentally solve the economic problem. Japan's economic stagnation has lasted for quite a long time, known as the lost decade. During this period, it was difficult for the Japanese economy to achieve real recovery, and long-term depression became the norm. There are various reasons for economic stagnation, including structural problems, sclerotic corporate systems, high debt burdens, etc. The implementation of the Plaza Accord had a major impact on the structure of the Japanese economy, revealing some deep-seated problems. The Plaza Accord exacerbated the imbalance in the Japanese economic structure to a certain extent. As a result of the agreement, the Japanese government has taken a series of measures to increase imports, especially of U.S. products. This has led to a decline in the competitiveness of some Japanese industries against foreign products. At the same time, a highly protectionist trade policy also limits the international competitiveness of Japanese enterprises. In addition, the Plaza Accord exacerbated the fragility of the financial system. A large amount of funds poured into the real estate market, excessive bank lending, and a serious bubble in the capital market. Financial institutions have insufficient awareness of risks, and risk management and supervision measures are not perfect. These problems came to light after the bubble burst, triggering a financial crisis and a credit crunch. The lessons of the Plaza Accord and the Japanese economic bubble had a profound impact on the subsequent development of the Japanese economy. The economic recession and financial crisis prompted the Japanese government to adopt a series of reform measures and began to rebuild and reform the economic and financial system. First, the government took a series of measures to stabilize the financial system. It implemented stricter financial regulation, strengthened risk management and supervision of banks, and took steps to strengthen capital adequacy requirements. In addition, the government has promoted the restructuring and consolidation of financial institutions to enhance their stability and competitiveness. These measures help restore stability to the financial system and improve the risk management and operational capabilities of financial institutions. Second, the government implemented a series of economic structural reforms to promote economic diversification and innovation. It encourages enterprises to carry out internal reforms to improve competitiveness and efficiency. The government has also taken measures to encourage innovation and technological development and promote the rise of new industries. In addition, the government also focuses on strengthening support for small and medium-sized enterprises to promote balanced economic development and employment growth. In addition, the government also attaches great importance to strengthening the role of stimulating domestic demand and reducing dependence on exports. It has implemented a series of fiscal policies to stimulate consumption and investment and promote endogenous economic growth. The government has also promoted social security and welfare reforms to improve people's spending power and social security level. At the same time, the government has also strengthened cooperation with the international community to enhance Japan's position in the global economy by opening up markets and strengthening international cooperation. It actively participates in multilateral trade negotiations, promotes the development of free trade, and strengthens economic cooperation with other countries and regions. In general, the lessons of the Plaza Accord and the Japanese economic bubble made the Japanese government realize the importance of economic restructuring and financial system reform. The government faced many challenges in implementing the reforms, but its efforts and determination laid the foundation for the recovery and sustainable development of the Japanese economy. These reform measures helped the Japanese economy get rid of the shadow of the bubble and embarked on a more stable and sustainable development path. This is the end of the explanation about the Plaza Accord and the Japanese economic bubble and the real estate crash. Do you have any different views on this? Welcome to leave a message in the comment area to discuss with everyone.